Revision test number 2, question 4. Prepare the revised cash book as at 31st January 2020. And B. Prepare the bank reconciliation statement as at 31st January 2020. Alright, so we are required to write up the cash book. Okay, let's see what the question says. As at 31st January 2020, the cash book of ELSA has a debit balance of 6,353 ringgit, but the bank statement received showed a credit balance of 2,170 ringgit. The following transactions cause the difference in the balances. Okay, we'll record the transactions as we go along. Right, I've got the T accounts ready here, and the cash book has a debit balance. So ELSA has money in the bank account. Debit balance brought down. Oh no, this is the closing balance as at 31st January 2020. Okay, this is as at 31st January 2020. 6353. But this balance is not final because there are all these adjustments, these transactions, and some of the transactions have to be recorded in the cash book. That's why we are asked to prepare a revised cash book as at 31st January 2020. Alright, so number 1, a check for 1,225 ringgit received from trade receivable was deposited into the bank account but not yet credited by the bank. Okay, this is an uncredited check. So this has been received from trade receivable and is been deposited into the bank. Therefore, we assume that it has been recorded in the cash book. Only that the bank has not shown this sum of money on the bank statements. So this is a bank reconciliation item. So I might as well start doing record the bank reconciliation statement transactions as we go along. Okay, then I can have B here. Bank reconciliation statement as at 31st January 2020. And so we always start with balance as per bank statements. Okay. At 31st January 2020. And it is, well, this is the credit balance shown on the bank statements, meaning it is money belonging to ELSA, right? So ELSA has money in the bank account, and that's why it is a credit balance shown on the bank statement. So 2170. Okay. Then we have the standard format. We say add uncredited checks and less unpresented checks. Add uncredited checks. Okay, there's only one uncredited check, so I would say uncredited check, singular. It is 1225. Okay. Transaction number 2, a standing order for monthly rental payment of 5,250 ringgit has not been recorded in the cash book. Right? This is a payment, but since it's a standing order, the bank was making the payment on behalf of ELSA, and ELSA will not know until the bank informs ELSA that the transaction has been done. So the transaction has been done, Well, since the bank earlier on did not inform Elsa, so Elsa didn't know about it, and therefore Elsa did not record this payment in the cash book. Now Elsa has received the notification from the bank. Elsa knows that this amount has been missed out, so therefore we need to record this amount in the cash book. It is a payment, and therefore it's going to be recorded on the credit side of the cash book. So this is note number 2. Right. Standing order, I'm going to use short form SO. Rental paid. It is 5250. Alright. Third transaction. Bank overdraft interest of 105 ringgit were not recorded in the cash book. Well, since this is not recorded in the cash book, we'll just go ahead to record it. So transaction number 3, bank OD. Right, OD is a common short form for overdraft. OD interest. $105. And transaction number 4, a check issued for salary amounting to 1,837 has not been presented for payment. Okay, this is an unpresented check. So we less unpresented check. And this is a subtraction, and therefore I would like to use the minus sign, which is 1837. Now transaction number 5, interest on fixed deposit received amounting to 875 ringgit was directly credited into the bank account on 31st January 2019. That is the last day of the previous accounting year. This amount was missed out for 1 whole year. It was directly credited into the bank account, meaning the bank put this sum of money, 875 ringgit, into Elsa's bank account. Well, since this one was done by the bank, Elsa would not know about it until the bank notified Elsa. But apparently this amount of money has been missed out, has escaped Elsa's attention for 1 year. Right, but it doesn't matter, since it has not been recorded in the cash book, we'll just go ahead to record it. Alright, but this is money received, therefore it's going to be recorded on the debit side of the cash book. So transaction number 5, it is FD interest received. 875 ringgit. And transaction number 6, a check issued for 350 ringgit had been recorded as 35 in the cash book. So this is wrong. Well, what's the difference then? What's the error? Oh, 350 minus 35. Well, the difference is 315 ringgit. This check issued has been under-recorded, understated by 315 ringgit. This is a payment, alright, and it has been recorded already up there on the credit side of the cash book before this balance was brought down. So it has been recorded. Now after we've calculated this balance brought down, we realize that Elsa realized that it's been under recorded by 315 ringgit, and therefore we can just go ahead to record the difference. So therefore it is number 6. Okay, so I should show the working. 350 minus 35. 350 minus 35, 315. Alright, so we've gone through all the transactions. Now we can calculate the results. Let's calculate the results. Alright, the debit total is greater than the credit total, so we are going to have a debit balance brought down. So carried down, and we are still at 31st January 2020. Revised equals this one minus 5250 minus 505 minus 315, so 1558. So we've got Then I've got balance brought down. So since this balance is final already, we've corrected it, so we can bring down the balance 1 day after the previous closing date. So it's going to be on 1st February 2020, which is first day of the following month. Alright, now we can also finish the bank reconciliation statement. And this is 1558, same as the cash book balance, so you can write down balance as per, or to be consistent, I just use the short form balance as per cash book. Lovely. So the beauty of this type of question is that we can know that we've done the question correctly when the cash book balance is the same as the cash book balance in the bank reconciliation statement. Good. Let's move on to part B here. Section B rather. Okay, section B, we are required to calculate all these ratios. This should be a straightforward question. Calculating the ratios should be easy. We are asked to state the formula and calculate the following ratios for leisure enterprise. Leisure enterprise. And I should write down ELSA here. A gross profit margin. And I can say it's equals to gross profit divided by sales multiplied by 100%. So we've got to state the formula, and this is what I emphasized when I was doing the tutorial questions with you last week on ratio analysis. We should always state the formula. Okay, now we have got to work out the gross profit. The gross profit is sales minus cost of sales. Right, so it is sales, which is 550,000 minus the cost of sales is 273,000. Right, 273,000, and then divided by sales 550,000, and then multiplied by 100%. So this is our working. And therefore it is equal to 550 minus 273 divided by 550 multiplied 100. So it is 50.36%. Okay, part B, the net profit margin. Net profit margin equals net profit before tax divided by sales multiplied by 100%. Okay, we've got to work out the net profit. We've got the gross profit, alright, so it is net profit is gross profit minus the expenses. So sales minus cost of sales gives us a gross profit, and then less the administration expenses, alright, less the distribution costs, and that's it, and we'll get the net profit. So, well, we can do that under the working section to show the workings, or I can do it straight away here. So, okay, maybe I'll just say net profit equals 550 less 273,000 less alright, okay, so I think I'll just show some workings. Alright, I'll do the workings here. W1, Okay, sales 550. Oh, and less cost of sales 273. All right. Then I've got gross profit. Then I less admin expenses 60,000 ringgit. Okay, I'm going to use negative figures all the way through. This is only workings. Distribution costs minus 28,000. That's it. There are no more expenses. Okay, my net profits. So 189, so it is equals to 189,000. So C workings 1 divided by sales, which is 550,000, and then multiply by 100%, equals 189,000 divided by 550,000 multiplied by 100, which is 34.36%. C, current ratio. Alright, let's do C. Current ratio equals current assets divided by current liabilities. So therefore, it is our current assets, closing inventory 157,000, and cash at bank are then and trade receivables. Okay, so perhaps it's better to do the workings. Add them up, add the figures up. Alright, so we have trade, closing inventories 157. Closing inventory 157,000, and we have trade receivable here. Trade receivable. Okay, that's trade receivable, which is 90,000, and then we have cash at bank. So we've got to be very careful, or personally I want to be very careful just in case I miss out something here. Alright, let's run through it again. So we've got closing inventory, right? Opening inventory is not relevant. It's closing inventory as current asset, and trade receivable and cash at bank. Fine. So 297,000 ringgit, and current liabilities are just the trade payables, 70,000 ringgit. So we have 297. All right, so it is 297,000, and I indicated that it is the details, the workings can be found in workings number 2 divided by 70,000 ringgit current liabilities, and so equals to 297,000 divided by 70. All right, 4.24. Now, let's go back to last week's tutorial questions. I kept emphasizing that we need to indicate the unit of measurement. All right, so here it is quite clear already. This is actually in percentage. All right, but what I normally tell my students to do in the case like this, I can indicate the unit of measurement by just typing the unit of measurement in the cell beside the numbers. So it is percentage, so that should be clear. And this is percentage again. All right, so this is number of times, so I can just leave blank. There should be no unit of measurement for current ratio. Okay, then okay, I think this is typing error again. From ABC and then ABC again, it should be DEF. But it doesn't matter as long as we write the formula of the. Okay, then trade. Okay, trade receivable turnover period equals, and this time it is trade payable turnover period. So TB turnover period equals trade payable divided by purchases multiplied by 365 days. So trade payable is 70,000. So divided by purchases. Do we have purchases? Yes, we are given purchases, which is 300,000 ringgit. Right. 300,000. Then multiply by 365 days. So equals 70,000 divided by 300 multiplied by 365. And then days. And the last ratio is the inventory turnover. All right, so inventory turnover. It doesn't ask for days or times, so I'll just leave it as times rather than days. Inventory turnover, then it is equal to cost of goods sold, cost of sales, right, divided by average inventory. So are we given the cost of sales? Yes, we are given the cost of sales, which is 273,000 ringgit. So 273,000 divided by average inventory. So then I would say average inventory is opening inventory, which is 130,000, plus the closing inventory, which is 157,000, divided by 2. All right. So it's equal to 273,000 divided by 130,000 plus 157,000, and then divide by 2. Well, it doesn't look very right, so my formula here must have been incorrect, so I should use 2 brackets here. I think I've shown it, I demonstrated this in our last week's tutorials. So this looks more like it. It's 1.9 times. So there's no need, since I've chosen to express the turnover in the inventory turnover in number of times, there's no unit of measurement required. So that's it. We've completed question 4 of revision test 2.